Hey everybody, hope this finds you doing well. This is Danelle here at Networkchain. Today we're going to talk about some of the biggest news stories over the past week, and of course we're going to go over the cryptocurrency market update. Let's go ahead and get started. Bitcoin is currently trading down 4% at $108,102. Ethereum down nearly 7% at around $4,300, almost $4,400. XRP currently trading under $3 at $2.76. It's down 8%. BNB is down 1.5%. Solana is still hanging on to around that $200 level range. It's down nearly 2%, so it's actually doing the best out of the top 10. And Tron down 5%. Dogecoin, the biggest meme coin of them all, still hanging in there around that 20-cent range, currently at 21 cents, down 7%. And then you have Cardano down 10%, currently trading at 80 cents. So if we look at generally speaking, overall, with the money supply, which is M2. So global M2 basically has to do with how much money is circulating in the global economy. So it has to do with the amount of cash and basically cash equivalent. So M1 is considered cash and checking accounts, and then M2 also includes cash equivalents or funds that can be easily transitioned into cash, like money market accounts and short-term CDs, certificate of deposits, for example. So that's all included in M2. And so as we look here at a chart of global liquidity versus Bitcoin, you can see that as global liquidity continues to go up, so that means that a lot more cash is kind of sitting on the sidelines, and cash equivalents are sitting on the sidelines that basically essentially can be ready to deploy for investing, and that does well usually for risk on assets, especially if interest rates continue to come down. It'll be easier for people to borrow money as well, so that's even more money that could be available for people to put into risk on assets that they believe could potentially yield them more money than leaving it in a lower interest rate treasury bond or money market account. So if you can see here from this account, or from this chart, you can see that the global liquidity is reaching all-time highs, and you can see that Bitcoin, even though it's taking a bit of a dip right here, generally over time, as liquidity continues to go up, Bitcoin also goes up. And you can see that it kind of, there's a rhyme and reason here. As global liquidity went up, Bitcoin went up as well. As global liquidity started to go down, you saw that Bitcoin went down. You see that global liquidity is continuing to go up and on that upward to the right trajectory. And now we're seeing that Bitcoin is taking a little bit of a breather here, but if indication, and if we look at historical performance, it's definitely not an indication of future results, but we can use some rhyme and reason when it comes to past performance. There's a likelihood that Bitcoin could potentially bounce back up and go along with global liquidity. Obviously, time will tell. We'll keep you posted, but it is something to keep, from a positive term, from a positive viewpoint when it comes to, even though we are seeing some dippage here, which is normal, is actually very healthy, and it's something that is promising when it comes to Bitcoin having a possibility to continue to move up further from here. If we did a straight line just like this global liquidity, there's a likelihood that we can have a much steeper drop. So if we have this nice healthy correction, which we're having here from when it reached the all-time highs, then there's definitely a stronger possibility that we could continue to move up. And maybe there'll be some volatility over the next month or so. Definitely when it comes to seasonality, September tends to be a month where there's a lot of volatility in cryptocurrency assets, including Bitcoin. So we wouldn't be surprised if we definitely see even a little bit more downside, potentially even down to this area of $100,000. That's where we have a couple areas of support. So that's a possibility. But it definitely is not a bad thing to see that Bitcoin is definitely taking a little bit of a breather currently, particularly since it is the season for it typically to do that. So if we look here at Ethereum and how it's been performing against Bitcoin, you can see here that we definitely have seen what looks like could be a bottom. And basically this is just showing if as ETH continues to outperform Bitcoin over time, it will spike up. And that's what we're seeing here. For a very long time, basically since 2022, we saw Bitcoin continuously outperforming Ethereum, having better returns than Ethereum against one another. And now we're seeing that Ethereum is starting to outperform Bitcoin over these last several months, basically since the end of April. And we're seeing that basically one Ethereum is equal to about zero point zero 0.04 Bitcoin. It actually reached a high of around 8.5, a little bit more than 8.5, back in 2021, December of 2021. We were going through that major bull market in November of 2021 when we reached the last all-time highs for Bitcoin and Ethereum. And then ever since then, basically, it's been very choppy. And then it basically was being outperformed by Bitcoin for a very long time for the last several years. So now we're seeing that Ethereum is definitely making a move up. And we'll continue to see whether or not Ethereum continues to have better performance against Bitcoin. And if it does, that also could be a positive for some of the other so-called altcoins that we see. That we follow in the top 10, that usually is an indicator that if we see Ethereum doing better against Bitcoin, some of those altcoins will continue to outperform Bitcoin as well. What a lot of traders tend to do is, as they see Bitcoin reach all-time highs, they'll take money out of Bitcoin and then put it into more riskier assets like Ethereum and some of the other altcoins and meme coins and things of that nature to try to catch the higher performing assets. Obviously, there's risk involved with that, so definitely make sure that you do due diligence if you consider investing in other cryptocurrencies and just cryptocurrencies in general. But it is an indicator that a lot of traders and investors look at, is this Ethereum to Bitcoin chart. So we'll continue to keep you posted on what's happening here also. Also with Ethereum, one of the positives when it comes to why people are very excited about Ethereum, as well as some of the other smart contract platforms, are stablecoins. Stablecoins is basically another way to access digital assets, and when we're seeing that the total supply of stablecoins on the market is higher, that basically also is another indication that more interest and more money is coming into the digital asset and cryptocurrency space. So if we're seeing more money coming into the stablecoins, basically stablecoins are pegged 1-to-1 generally with fiat currencies. There's some that are pegged to other assets as well. DAI is pegged to gold, for example, but the largest stablecoins are Tether and USDC, as you see here in this chart. Tether has a market cap of 168 billion. USDC currently is around 71 billion. And so the way that these stablecoins are minted and more are put into circulation is when an investor, institution, a retail investor decides to put in their fiat currency, which is once again pegged to that stablecoin, is backed by that stablecoin. Then that stablecoin will come into circulation, and then once that stablecoin comes into circulation, that investor may choose to trade into other cryptocurrencies and vice versa. And so what we're seeing is that as the stablecoin market continues to go up, that just continues to show that there's more money that is coming into the digital asset space. And then one thing that was very bullish for stablecoins and cryptocurrencies as a whole, and we've talked about this before, the Genius Act, which was passed and signed into law in the United States. And basically it is a regulatory framework when it comes to the regulation, as you can see here, of payment stablecoins. And basically it provides transparency that these stablecoin issuers are going to have to adhere to when it comes to auditability of their reserves, because each stablecoin has to be backed by the fiat currency. Sometimes they're backed by U.S. treasuries as well. But there needs to be some type of transparency when it comes to making sure that those stablecoins are actually backed by the amount of stablecoins that are actually circulating in the market. So that is actually a good thing when it comes to making sure that these stablecoin issuers are being held accountable with regards to making sure that they are circulating the amount of stablecoins that are actually pegged and has proof of reserves when it comes to dollars and treasuries that are backing those stablecoins that are out in the market. So when it comes to some of the other use cases to smart contract platforms like Ethereum and Solana, there's another big part of smart contracts when it comes to decentralized finance. And basically it's being able to do peer-to-peer transactions, institution business-to-business transaction without the need of a central or third party when it comes to banks, for example, and you're eliminating these intermediaries with DeFi. And obviously it's still a growing industry. There's been a lot of thefts and a lot of hacks when it comes to DeFi, so it definitely is something that you have to be extremely careful of and cognizant of when it comes to some of these platforms that are being used for decentralized finance. But it is an emerging peer-to-peer system, and it consists of using the blockchain technology because they are using these smart contracts. So it has to be in the code. And so you're able to not only have to rely on humans or rely on some intermediary to make sure that these things are happening. Basically, as long as it's coded into the smart contract, when those two things happen, then that transaction will occur. So there's definitely a lot that you can learn, that we can continue to learn about DeFi. Investopedia obviously is a great resource when it comes to learning about some of the basics when it comes to investing, and some of the terminology when it comes to the crypto assets and terminology. So definitely make sure to check someplace like Investopedia if this is something that you're interested in getting involved in. Also, another use case for smart contract platforms are NFTs. When you go to buy an NFT, you're basically signing a smart contract when you're buying and selling these NFTs, especially if you're using some of these platforms like an OpenSea, which is one of the largest NFT trading platforms out there currently. CryptoPunks, the first 10,000 profile picture NFT collection came out in 2017. Still one of the considered one of the grail NFT collections in all of the NFTs, and currently the floor price is about 46 Ethereum, which is around $200 or so thousand. So obviously time will tell as we continue to see whether or not NFTs, or at least a new iteration of NFTs, will continue to become more recognized in the future. Also, real world assets, as we talked about, not only can smart contracts and the blockchain tokenize various assets from real estate, but also can digitize or tokenize stocks, for example. And Robinhood is jumping all in feet first when it comes to tokenization of stocks. So in other countries, for example, who may not have access to U.S. securities, they are now using stock tokens, which basically are tokenizing these stocks. So that's not, as you can see here, buying the actual stocks, but you are buying a tokenized contract that follows their price recorded on a blockchain. So you can buy, hold, and sell these tokens, but you cannot send them to other wallets or platforms at this time. At least currently, you can only keep it on the Robinhood platform. But eventually, you'll be able to, it looks like, have the optionality to be able to use other platforms as well with these particular tokens. Aave is also a decentralized platform, a very popular decentralized platform, as well as Uniswap. There's a bunch out there, but you have to be very careful. As we mentioned earlier, there's been a lot of hacks and scams when it comes to decentralized finance. But this is a way that if you wanted to use lending with your crypto assets, if you have a certain amount of Bitcoin or Ethereum or whatever crypto assets that you have, and you want to be able to get stable coins back, for example, and do what you will with the stable coins, as long as you pay that loan back, then you would get your collateral back, which is those crypto assets. And so this is the full power of decentralized finance. You don't have to worry about going through a bank and credit checks and all that. Basically, as long as you have collateral to put up, then you can use decentralized finance to be able to get loans, for example. So there's definitely so much to this world of digital assets that continue to grow. We just want to continue to learn and share our findings. And also we want to, continue to build this community as we all get involved in this digital asset world, because digital assets are growing in an ever-growing digital asset world that we're living in. So make sure to continue to stay posted with us here on YouTube, as well as on X at Networkchain, and on Instagram. We appreciate it. Thank you so much for watching. We look forward to linking up with you soon on the Networkchain. Take care.